Good afternoon, everyone. I want to welcome all of you here, both here and remotely. We have about 25 people watching us or listening to us from afar. You got your packets, have all the agenda and the handouts. For those of you who are watching us from remotely, the information is also available online. If you have questions, you'll see the prompts provided during the presentations, email to Carmen, and then we'll make sure that we answer those questions. And then for those of you here, please remember that when you have a question, to raise your hand and wait till a microphone comes by so that the people elsewhere can hear your question. And please state your name and which office you're from. And we'll try to make sure we can answer every question. And if not, we'll get back to you later on. If you're a CalSTRS member, we will validate your parking. Otherwise, all you can do it by a credit card. So in terms of the agenda, it's in your packet. There is one change we wanted to make to it. We're going to move the creditable compensation regulations to be right after the state and federal legislation update, because we want to make sure that gets done early on in case people have to leave early. But anyway, we're going to start off with the state and federal legislation, then the creditable comp. Just sort of talk a little bit about what we're doing as far as the process for the regulations, and then a short presentation on the results of the employer survey, an update on full enforcement, direct reporting, and employer training, implementation of the GASB standards that are in effect for us now and will be in effect for employers next year, a discussion around the pension solution project, which we're going to be initiating, or which we're in the process of initiating right now, an update on PEPRA, and then open forum and discussion, and then the draft agenda for November. Copies of the presentation are in here, as well as a directive on the new interest and contribution rates for various things that you can purchase, as well as analyses of some of the bills that have changed since the last time we met. So is there anything that you want to make sure that we include in the agenda that may be part of open forum, but is there anything else you want to make sure that we include? Yeah.
I would.
Hold on, wait a minute. Wait, microphone? We got a runner? Thanks.
So good during the first portion.
I know.
Yeah, actually, if we could just talk briefly about the possibility of pre-approval or possibly running determinations through the audit group or something before a retiree begins work. I have a situation. There's a specific situation. It could be qualified as maybe a question, but
Running what kinds of things through the audit group?
for instance, if you have an executed employment contract for a CalSTRS retiree, and you submit it to CalSTRS and ask them to determine if this is, CalSTRS creditable, and then they'll say, no, this doesn't appear to be CalSTRS credible, but, and so they give a determination, but then there's a disclaimer at the end that says, of course, if the audit team determines the situation to be different, then, I'm just wondering if there's some way that we can get some kind of assurance up front, having the executed contract in hand to maybe run through the audit group before they start working.
Yeah, I think
That's an internal process that we can certainly take a look at, and I've got my member account services staff, the ones who are doing that evaluation right now, and we'll see if we can do something internally to coordinate that so that you have confidence then that our determination is something that would.
Right, that we can stand on,
Yeah.
that
I
we
understand
can,
what your concern
we
would
can
be
say,
if
yes,
we
okay.
later change our mind.
Right, after the person's already been working, and so anyway, we have a current issue with a consultant to our county superintendent, so.
Okay.
Anyway.
We can take a look at our internal process for that.
Okay. And so can we talk about it later, or no? Or,
Well, I think
or this
we
is
would
the-
need some time, because quite honestly, we'd probably need to talk to our legal office too, just in terms of whether or not,
Yeah.
the authority around
And
it.
it's certainly nothing about, Brian and Tim have been great about giving us the answers. It's just that disclaimer that, that causes us concern, and the retiree who wants to work.
Right.
Concern.
You know what? Maybe it might be better is if we put that on the agenda for November, so that we have some time to sort of talk through internally what that would look like.
That would be really great. That would be fabulous. I would if we could just get that conversation going, something, I think, just to give us assurance, and we can tell them, oh, sure, go ahead and work, and know that you'll be okay.
So are you So the exemption rules have changed,
Right, and this is.
and the 180-day ban is in effect.
Right. This is not someone. This is not a very recent retiree. This is
Okay.
someone who's been retired for a while. It's just the duties that he's performing for us at, it's a county superintendent's office, has to do with things like superintendent searches and.
So you're talking about a retired person, not an active person looking at their.
Exactly.
I'm sorry.
Exactly. So we've sent up the question, and can a person do this and this and would this and this be CalSTRS creditable, and attach a sample contract, and so the answer, and we get a great answer back. So we get an answer back that says no, it shouldn't be credible. Send us the final contract. Then we send the final executed contract, and they say certainly it doesn't appear to be CalSTRS creditable, but then there's, like I said, that disclaimer at the end that said, of course, audit services could just determine something different later. And so in the meantime, the individual, the superintendents, he does superintendent searches and things, and the districts are counting on him to work. And so, but we've got a couple situations that could be very similar, and questions all the time from the districts. So we thought maybe the answer could be if there could be a process at CalSTRS whereby we could submit for a predetermination or something, so that folks could work with assurance that they'd be okay.
I think we've got a good understanding of what your question is, and we can discuss it internally and make sure that we touch base with all of the relevant parties, so that when we come back, and we'll put it on the agenda for the next meeting, and we'll be able to have an intelligent conversation about that.
I sure appreciate that. Thank you so much.
Hi, I'm Debbie Ledford from Nevada County Superintendent of Schools Office, and I would like some clarification on reporting car allowances. Recently, we had a superintendent that applied for retirement, and she was told her car allowance would be excluded because they cited Ed Code that said it's reimbursement. So now some of our districts don't feel that we should be taking STRS on car allowances. So I would like to know what STRS regulations are at this time on car allowances.
CalSTRS doesn't have regulations that govern what's credible compensation and what's not. It is generally discussed in the education code. We are in the process of developing those regs, and that's something that Michelle Johnson's going to be talking to you about. But we know that there's considerable confusion about how some of these things that are sometimes characterized as fringe benefits and appear under many different descriptions in contracts. And so we're going to try and establish some standard way of looking at that and provide clarity about what the law really means in those areas, and guidance then that would serve as guidance to all the districts in how to report or not report certain aspects of compensation.
So could we get clarification? We should continue until new regulations come out, or if it's something that we should be looking into changing at this time?
Peter, do you think that's a topic that we should include a directive or a circular on?
I think we can probably provide some additional guidance there, but truly I'd rather wait for the regulations because they have the force of the law. What you need to look at is at the contract itself, if it says that it's a reimbursement of an expense, of a job-related expense, then it's not credible. The statute's very clear about that. It says credible compensation does not include reimbursement of job-related expenses.
Now, at time of retirement, are they requesting contracts when they make that ruling? Or-
Potentially, they could be subject to a review by one of our staff. That's a
Okay.
possibility.
Okay, thank you.
Hold on, please.
But generally, isn't that taken to be granted because they do not submit any kind of paperwork to verify it, that it's considered as compensation?
What actually we started to see is in the contracts themselves, it actually specifically states that it's a reimbursement of a job-related expense.
And I'm going to suggest that since this is a common topic and it's one that, is really more appropriate for us to talk about after we go through our scheduled agenda, if we have time, we can answer additional questions about it then. Otherwise, we'll add that to further conversations with this group. It is an issue that we're looking at in the development of our regulations. So, we know that there's more guidance that we could give on that area about the law.
Thank you. It's just a change in the way we think, the way we've done business in the past.
I would agree.
Anything else before we move on to the agenda? And is Joycelyn going to be? So the first one is on state and federal legislation. So is Marianne? Oh, Marianne is here. There's Marianne to give us an update on state and federal legislation.
Good afternoon, everyone. The update is there really isn't much of an update. The legislature's been on recess. Assembly just came back this week. Senate's scheduled to come back next week. In your packets, you have a goldenrod that lists our bills. This year, it's a very short list. I think we had enough to deal with PEPRA last year. On Monday, we'll have our 2 housekeeping bills. Actually, they were on consent and they're moving forward. So they weren't even going to be taken up in committee. And the other bill you might be interested in is AB 989, which just seeks to get authority to make the default of transmitting certain communications to members electronic instead of mailing it unless the member requests it. So particularly, we're talking about the retirement progress report, but any efforts we can move forward with to be more green is what we're hoping to do. Coming up, there will be some updates on the compensation or credible compensation regulations, so I won't even venture that way. Did you have any questions about legislation? Yes. Huh? Oh.
I'm so proud of myself that I did not say anything. Melissa Anderson again from Sacramento County Superintendent of Schools. I just regarding AB 1381, the cleanup bill, I keep hearing that there are some changes tucked away in that we should be aware of, and I no one has given me specifics about that. So I was just wondering if maybe you could help maybe delineate for us some of the technical changes that are being made within 1381.
Actually, Joycelyn is our resident expert on that. She's working on the amendments. They're really technical and clarifying and conforming so that we have the PEPRA, we can implement PEPRA as we're supposed to, but if you have some more specifics, I defer to Joycelyn.
So the most recent analysis is in your packet. So I mean, there are several changes.
Goldenrod?
No, I think there should be an analysis of AB 1381 in there. But there were lots and lots of changes in the bill, so I don't know if you have a more specific question. Just so I can focus.
Well, no, because I'm not getting specifics from, so
Okay.
I don't know. Okay, so there is something in our packet. You said that specifically about 1381?
There's a couple of things that have come up, just which may be what you're referring to, because I've heard around that. One of them is that there's a provision in the bill that authorizes CalSTRS to get information from EDD with respect to compensation paid, and for purposes of us enforcing the earnings limits for retirement. That's new. I mean, but it's part of, it's consistent with what Pepper was trying to do, is to make sure that people, when they're retired, there's a limit how much money they can earn, and we need to get, and quite honestly, a lot of employers are not very good about reporting the compensation that are being paid under a third party or a contractor. So we need some way of verifying it. So that's one piece. Another piece was provision dealing with what compensation counts towards the earnings limit, is that it would now include payments made by an employer to a 403B. Somebody may be up against the limit, and so what they do is they basically give the employee money through another means. That's going to count now towards the earnings limit. And once we've explained it to people, they get it. It's fine. It just, they don't understand the context. But those are the kinds of things that we've heard, and that may be what you're hearing about as well.
Oh, I just appreciate the clarification. I do see the handout now with more information, so I really appreciate that. Thanks.
things that's come up is what we're trying to clarify in the definition of credible compensation, a publicly available written contractual agreement. We're trying to capture all those and that those can be used in determining credible compensation, and also making sure that the list of tax sheltered annuities and the plans under the IRC that we use the language including but not limited to because things could be added to the IRC. For example, 457 programs weren't listed before, 401A programs weren't listed before, so we want to make sure we capture those up front, that we're not ignoring anything that could creep in there, that could either be credible or not credible depending on how it's paid, so.
Well, thank you. Thank you so much. Appreciate it.
And also, just so you know, there's another version that's going to come out Monday, right? There'll be, and we are preparing the analysis of that. There are some further amendments that we've identified. But the important thing is to know that there's a very substantial issue still outstanding with respect to Senate Bill 13 and the definition of credible compensation. Until that's resolved, the whole section around credible compensation as applies to future members is up in the air. So the way it reads now could easily change. Significantly, right now, the way the bill reads is lottery and parity payments are creditable, regardless of how it's paid. That may change, and it may require that they be paid each month in order to be credible. So I want to make sure we've talked about this before, but there's somewhat of a moving target outside of our own control. So I want to make sure people stay attuned to what's going on with that bill.
Thanks for addressing that.
Legislation?
Cool, thank you. So Cassie will now give us a little brief on the credible compensation regulations.
Good afternoon. I'm just going to provide an update. I don't have a PowerPoint presentation. So we're currently in the process of drafting the credible compensation regulations. And just to kind of give a little background, we're doing this to provide clarification of what is considered credible under the credible compensation portion of the law. The process we hope will take about a year. We hope it will be implemented as of July 2014. Where we're at right now, we had 6 info sessions last week, and we greatly appreciate all the participation in those info sessions. Just to give a little background for those that didn't join us, we had some questions for employers and districts of how districts pay things and how they report things to CalSTRS, just to provide us with some information on some areas that maybe we need to provide clarification. We actually had 110 participants, which was awesome. Some of the things that we saw that had a lot of variations, for instance, were how districts determine what a class of employees is. So we heard a lot of variations with that. Some people do it based off duties, and then we heard variations of class of employees is your certificated individuals, your classified individuals, your certificated management, your classified management. So there's a lot of variation in that, as well as calculating full-time equivalents for part-time assignments such as coaching. We heard some people have a designated part on their salary schedule, like the first step where they use as for their pay rate. And we heard other districts use the compensation earnable that they are at in their normal work. So we heard a variety of things, and so I think it gives us feedback as far as where we can concentrate on providing clarification. We also met with the retirement advocates last week and kind of let them know where we're at. There will be an information item to the board in September, letting them know what we're doing. And we plan to have draft language to the board in November. We also plan to have draft language to share with our employer community. We're hoping in September. That's the plan right now. Things could change. Like I said, the process could take a year. If the draft language does go to the board in November, which is the plan, it would be sent to the Office of Administrative Law, and then there would be the 45-day period of public review would happen and go through that process. So that's really where we're at. We are looking at things like fringe benefits and allowances and what else? Job-related expenses and reimbursements. We are looking at those things in the course of drafting these regulations. Yes, Francis?
You're going to address both classic and new members, right, based on pension reform?
Right now, we're concentrating on giving you guys clarification on credible compensation pursuant to our CalSTRS 2% at 60 members.
Once you determine what, hold on, your mic is on. Once you determine what those regulations are going to be, are they going to be retroactive back, or are they going to be just going forward? Because some of these issues could be items that have already been reported as credible compensation and could be changed.
We plan to have them, and correct me if I'm wrong, prospectively. And like I said, we plan to, we hope to have it done by July of 2014, but if we don't, that was one of the things we wanted to ask too, if this goes into the fiscal year, does that cause more issues for employers and for reporting and things like that?
Okay, and you will allow employers to have a voice on what difficulty they may have going back retroactive to a period of time?
Well, we're not looking at going.
You're not looking at retroactive.
We're looking
I
at,
thought you said-
I'm sorry, July
said
2014
prospectively.
moving forward, perspective, yes.
Okay,
Yeah.
all right.
Yes. But if it is not implemented July 2014, let's say it's September, does that cause more issues for you guys? Is what we need to know.
But it would be September, reporting after September. It would always be prospective, but the question is, if it's in the middle of the year and you have to now change the way you do it, prospectively, is that an issue unto itself? We want to make sure we understand that. Also, in terms of, Francis, in terms of your other question about the 2% of 62, we're hoping that the AB 1381 would be provide sufficient guidance that we wouldn't need to do regulations right now. It may turn out that the way that these other discussions go, that we're going to have to do it. But right now, as Kathy said, we're really focusing on 2% of 60 because there is no legal guidance out there now.
Okay, then that leads to another question. There has been at least one instance where CalSTRS has come back and said we needed to reverse reporting for a particular type of special comp, and this special comp had been reported for the last 8 or 9 years. Is that going to continue where STRS is going to go in and look and make a determination now that it's not reportable and ask us to go back and reverse that reporting? Or is that going to kind of be just stopped until you come up with regulations?
I believe that because we're looking at certain situations on a case-by-case basis, that we would still ask that certain items be corrected if we determine that they're incorrect. So the regulations may not change that part of the process.
Based on Francis' questions. Since you just said that it's case-by-case basis, so in the meantime, we continue our practice because most of it was based on old AB 2700 guide, but there is nothing we received after that to change anything. So that means some people, they might be able to take the benefit of it if they are not looked upon, and some won't. I mean, if you pick employee A but not B,
Yeah,
and they both are paying mileage, for example.
right.
So in the meantime, we don't say anything to the districts and we keep using the old practice till you catch it and call us back.
Peter, do you want to address that? I'm not sure how to address that question.
If you think it's wrong, change the practice. Okay, so you, okay, if you think it's right, then continue with that practice. But if you're questioning it, then you may want to make a consideration of, should it be different? Okay.
So it seems that, that there is some angst amongst the employer community about how we're going to deal with things today compared to how we dealt with them last year and how they'll be dealt with in a new environment where regulations provide more clarity and structure. So I think that we will come back to the employer group with some additional information once we've got a solid plan to present to you in terms of how to deal with certain of these issues now.
This is Debbie from Nevada County, and I just wanted to, one of my concerns is that an employee pays into this for that benefit, and then in the end of it's disallowed, and they don't, well, you said you're going to go prospectively, so you'll go forward, and then so they've paid into that up to 2014, and then forward they don't, but they're not given that benefit at retirement. Will that be corrected? So, I mean, that just doesn't seem, it seems like, would they get credit for it up to that point?
It would count as, it would be credible compensation up to that point. If it happened to be their highest, then that is what it would be. But I guess if somebody was, 35 years old now, then presumably their compensation when they actually retire is going to be higher. But that's just the nature of a final compensation plan, for that matter. If somebody was, getting paid a lot of money 30 years before they retired, and then they took a lower paying job, which ended up being more money at the end, they wouldn't get any credit for what they earned in the past. That's just the way these pension plans work. So I don't think this is any different from that.
Okay.
Okay, so next is Michelle to talk about the results of the employer survey.
Hello. The bottom one? Okay. Well, maybe didn't want to move ahead so quickly. Let's see. So hopefully most of you know that we do an annual survey, and I think we've been doing them now for at least the last 4 or 5 years. Is that correct, Peter? Sorry. I could dance. It's okay. So we've been doing them, and this year we sent one out in, I believe, mid-April. We sent it out to 153 contacts, and that includes district and county office staff. We received 83 responses back. That's a little over 50%, which apparently is really good, and it's up from last year's responses. We have some general themes. Most of them were positive, which is really good, about the employer services reps and the services that they provide you. And then we also included in this survey questions in regards to the employer training, the communications that you guys receive from us, like the e-bulletins or the newsletters, and also the services that you get from business readiness. Apparently, I can't click and talk at the same time. Carmen, it's not working. Okay, I didn't do it. Thank you. So, customer satisfaction. Overall level of employer services products and services from the reps, we had 80 respondents, so thank you for that. And the one that's highlighted, 57%, 57.5%, so 46 of you were satisfied. And even better, 18, almost 19% were completely satisfied. And then the same for the somewhat, neither, and dissatisfied. Did it click? Okay. In regards to just your overall representatives, having interactions with them, talking to them on the phone, communicating through email, we had 79 respondents. Of those 79, 32 of you were satisfied, which is a little over 40%, and 38, which is 30 of you, were completely satisfied. So that's pretty good. Positive trends. Thank you. Okay, I'm not clicking, sorry. This slide shows you some other areas that we sought your opinion on. The timeliness of responses, accuracy, consistency, were our responses easy to understand, were we courteous, and when we asked you for information, did we explain why we were asking? And so those results up there tell you pretty much that you were satisfied or completely satisfied. And then for those that aren't, I'm going to address those later. Okay, good. Thank you. So I said there were some themes. In the most, generally speaking, in regards to your rep and the services that we provide, they are positive. What some of you commented on in the free form section, you said that we were helpful, which is great, thank you. Some expressed repeatedly that they were happy staff were being promoted, but didn't like the turnover rate because you got a new rep, and that meant not as experienced, probably for the first year or so. Said that there were difficulty with technical systems and that there's a lack of consistency in the information that we're sharing, which very good comments. I mean, we definitely want to address those with you and do better, but good for that. What I'm hoping happens with the reorg that we did, changing your reps again, starting July 1, with that reorg, I wanted to dedicate staff to specific workload. And that means that those staff will become subject matter experts on that particular workload, and you'll have access to them. But most importantly, instead of having access to the one rep who would do everything from soup to nuts, you might have 3. One for DB through 12, one for CB or community college, one for just work orders, things like that. But they'll be specialized in those areas. Maybe not today, if they're brand new, because we still had some that just came out of new employee training a few months ago, but they will be. And that's how we are redeveloping our training as well for them. And speaking of reorg, I think in several of the emails I sent you, I said there's a new manager. His name is Rob. Rob, would you stand up so everyone can see you? Rob Hernandez is the manager over the transaction team, so it's his staff that'll be sending you those historical work orders that you all love to hate. I'm right there with you. Something after 5 years and I forget. In regards to the other areas that we surveyed you, the external training, the business readiness, and the communications, you guys really like the first 3, but what do we have to do to get this meeting into the 90%? Bring candy, better coffee. Think about it, because I'm going to ask you. And when am I going to ask you? I've got Dre and the other managers setting up conference calls because I want to get some personal feedback from you. So be on the lookout. And think about what we could do to get this meeting all hyped up for you to give us a 90%. 70's not bad. I mean, I prefer a B, but if I got to get a C, I'll take it. In regards to your training needs, you clearly, and I think that's been a topic of discussion so far this afternoon, rated creditable compensation as your highest need. I don't think that's a surprise there. All the way down to cash balance, nice range in between. Hence the reason Peter's working on regs. And then what do we plan to do with this information? Definitely want to reach out to you, want to get some specifics, want to make some improvements. We want to continue partnering with you to ensure that when we bombard you with requests for information, we're not giving you unrealistic timelines, or we clearly explain why we need it 5 minutes ago. So it's that kind of stuff. We're going to reach out a little bit more, and we're going to start with the conference calls. I think we're trying to do 4 a month, so it's going to take us a while, but 30 minutes, hi, what's going on, what's working well, what's not working well, and then follow up with you in about 6 weeks after that just to see if you've noticed any changes. But that's what we want to do with this data. We want to keep doing well what we're doing well. We want to improve what we're not doing so well. So we appreciate your feedback. I really thank you guys for taking the survey, and I think with that, I'm done. Any questions on the survey? Good, thank you.
Okay, not seeing any questions, we're going to move on to our next presentation. It's on full enforcement, direct reporting, and employer training update from Bill Frericks. Boy, those sound exciting. Maybe that's what we need to do, is make some titles of these discussions a little jazzier.
It's exciting. It's exciting to me.
Okay, we all know that's not. Bill, your sense of humor and excitement might differ from the norm.
No, people need someone walks by with a card that says applause.
Just throw candy out for, good comments and questions. That would work. All right, so direct reporting, full enforcement. Get excited. Direct reporting. So, for those of you that are not familiar with direct reporting, we made some changes about a year ago to allow community colleges and school districts to report directly to CalSTRS without having to go through the County Office of Education or their report source. We piloted one this fiscal year, 12-13, and that was Sierra College, and everything's gone smoothly and well. We are bringing 3 new ones on board for next fiscal year, 13-14.
Okay, Bill, we're in 13-14.
Oh, I'm sorry. 13-14. Right. We are in 13-14, but the reporting hasn't started yet.
That's true.
They are starting up very soon. The July report, I believe, is not due until the end of this month, right? Is that right? Yeah. So you're right. We're in 13-14. They're starting up right now. The first reports are going to start coming in probably within a month. What's that? Sure. San Mateo Community College is one. The other is, put me on the spot, Corona Narco, yes, thank you very much, Corona Narco USD, and Cupertino USD are the 3 that are going on, starting up this month. So, what we do with these is they have to start on a fiscal year basis. So we encourage everyone that's interested to sign up now. We're going to take new requests until probably November of this year, and then we'll sort of close it off. And those new requests, they won't start up until the next fiscal year. So what's that, 14, 15? Is that right? Yes. Fiscal years sometimes get me. So we will go through an evaluation period after November and determine whether those new districts are ready and capable. We have requirements in the Secure Employer website that you can go out and look at, and every district and county that is interested must meet those requirements. They're very specific and very hard. If you can't meet those, you cannot direct report. So please go out and review those. They're in the reference item section of the Secure Employer website. We are not accepting charter schools at this time. Charter schools are not eligible for direct reporting. Sorry, I'm sure that breaks a lot of your hearts. We may consider that in the future, but right now it's just community colleges and school districts. The other big thing is it has to be a mutual agreement between the district and the county. It can't be the county pushing the districts away, saying, please take them, and the district saying, no, or the other way around. It has to be mutual agreement between both parties. Okay. Any questions about direct reporting? Francis. Wait, we gotta wait for the microphone.
Is size one of the determining factors on whether you're going to allow a district or community college to come in to direct reporting? Are you looking at the smaller entities first because they're easier to handle?
Size has no bearing on our decision. It's whether they can meet our requirements or whether they can't meet our requirements.
Okay, and if one of our districts felt they met the requirements but were not allowed to come in direct reporting, who do they need to speak to?
Well, moving forward, if they meet the requirements, they should get in. They should not be denied if they meet the requirements. This past year, we went through a little feeling out and we changed the requirements a little bit. We really firmed it up. The requirements are pretty much set in stone. If they can meet those requirements, they can direct report. There is going to be no decision along the way that says, no, even though you meet the requirements, you can't do it.
Are you going to limit the number of entities that come in direct reporting per year?
Potentially, yes. This past year, I think we had about 12 that wanted to do it, and that whittled down to 3. It's still somewhat new, so we want to sort of gradually ease our way into this. So, you know, we'll just have to evaluate it as we go. I would imagine if next year we got around the same, I don't think we'd have any problem adding 12 new ones. If it's 50, maybe that's a little overboard, but we'll cross that when we get
Yeah, I
there.
think one of the things that might limit the number that we can take on in any given year is, do we have capacity to service them all well as direct reports? Because we have to have that internal capacity to provide the service to the employers. Otherwise, everyone's service is diminished, and we don't want to provide a reduction in the services that we provide now. So, you know, we'd have to be looking at, do we have internal capacity to handle a big increase in the number of direct reports?
In that case, size would matter, the size of the entity.
It could.
Any other questions about direct reporting? Yes.
And mine kind of follows along with Francis. You mentioned there may have been 12 that applied, and I thought we had applied and hadn't heard anything, and we're not one of the 3, I guess. So my follow-up would be, is there someone I can contact to find out why maybe we weren't selected, if there's something we need to look at in our practices, maybe help us out for future?
When an inquiry comes in, and I don't know where, we're asking that you send it to employerhelp@calstrs.com if you're interested in participating. Normally, you should receive a response within a week that we've got it and we're looking at it and you're on the list. We'll be in contact. If you never got one of those, then it got missed along the way.
So I think, let me just add to your response, Bill. I think it's a fair expectation that if we don't approve your request, then we provide you with feedback as to what pieces of our criteria we didn't see were met sufficiently, so you would know what to work on if you want to continue to pursue that route. And by the same token, if you're not getting the acknowledgement that Bill talked about, that we've received your request, contact us again, because it could be that we've missed it somehow and don't want to turn away your opportunity for consideration. Thank you.
Yes, it's not something where it goes into a dark corner for 3 months and then we get back to you. We should be getting back to you within that week. And if you don't hear anything, start knocking on our door. Any other questions about full enforcement? Or direct reporting? Getting all tripped up. Full enforcement, okay. So, I hope you're all aware that we have these 7 new, or they're not new, but 7 business rules that are now enforced. Renee presented the last 2 ACs about these, that they were coming. August 1st, they're all going to be enforced. Well, as of August 1st, they are now enforced. Some of the reasons why. When we went through ERP, one of the last releases of ERP, there were a number of edits we weren't very confident with. We weren't sure if they were working appropriately. With penalties and interest, when that rolled around, we made some more changes to these edits, and we now feel confident that they are working appropriately and assessing your data appropriately. So we decided that these can now be enforced, which is what we did starting August 1st. Also, what we did in anticipation of this is we came to the last 2 or 3 EACs. We asked for any cases that you may see that where you don't think the edit's working correctly to let us know, to send us those cases. We also reached out to a couple of counties and asked them in a conference call whether they were having some issues with these business rules. And the overwhelming theme was the 103 volume was way too high. Everybody was getting hundreds, if not thousands of these, and it was very cumbersome. I'll talk about that one in just a second. We did something about that. But other than that, other than the 103, we really didn't find any cases where we found that the edit wasn't working appropriately. Now, that's not to say there isn't something that you may come across now that everybody's enforced. So please, if you're seeing something, some reporting that you're questioning, let your member account services representative know. They'll contact my team and we'll look into it and we'll try to resolve it. So be on the lookout if if you notice anything out of ordinary with these. The two changes that we made, one was to the 067, that's the pay rate adjustment, alters earned earnable ratio. This is no longer employer approvable. So this is a correction required, and you must fix it. You cannot approve it. Now, there may be some questions about this, and I can see some faces in the audience. They're kind of, oh, you sure about that? We're pretty sure. But again, if you're coming across cases where you think it should be going past this edit, it shouldn't be getting marked, let us know and we'll look into it. And as for the 103, we have addressed the volume issue. We have raised the tolerance on this one. For 1314, the tolerance has been raised for non-community college from 0.15 to 0.20. That evaluates a monthly service period. That's service credit. And then for community college, we raised it from 0.2 to 0.25. It was effective July 1st. Yes. Well, okay. It's based on fiscal year reporting. So when your July file comes in, the new tolerances will be applied to the July file. Anything prior to the July file is subject to the old tolerances, which is 0.15 and 0.2. So your June file. This is the July file. It is the July file. And you're not seeing a difference? What's the count, may I ask? 2200. Well, we can talk offline about that. When we looked at it, we did an analysis, and raising the tolerance to this level should eliminate around 60%. You should see a 60% reduction in this. There's also something else going on with this edit where it prorates if you're reporting a partial period or like a day or a week service period. We're also going to eliminate that, but that's going to take an enhancement request, so we anticipate that won't be in for another few months or so. When that goes in, it'll make it go down another 20%. So this change, initially raising the tolerances is 60%. That enhancement request will lower it another 20%. So you should see an 80% reduction soon. 60% now, 20% later. The other thing about the 103 business rule, I just wanted to bring up and bring to your attention, we do see misreporting on this quite a bit. The number one thing we see is miscalculating the earnable. So especially with summer school, remember the earnable should be based on the full-time equivalent for the position. Summer school, often it's not, and it looks like they're working a half a year's worth of service credit or more in the summer, and that doesn't make sense. So please be aware of that. Using incorrect pay codes. So if you're using an annual pay code instead of a monthly, obviously it's going to inflate the service credit and it's going to trigger this rule. So be on the lookout for that. Also combining multiple month earnings into one monthly period. If you're doing that, it's also going to inflate the service credit and you're going to see this. So these are all reporting errors that hopefully you're on the lookout for and you're fixing. Resources for this, the F186 file specification is within the Secure Employer website. It's up to date. It has all these business rules in there with descriptions, how they work, what they're looking at. So please use that to understand these business rules better. And I believe that is it for me. Any questions?
Hi, Pam Fowler from Sac County Office of Ed. My question concerns the summer school. We seem to get a lot of those errors, and I know you said if you use the annual, but we were told if you're part-time, you do use an annual with the Code 55. And I know they used to have a summer school coding when we didn't report it years back. Is there a way to have some kind of special coding to tell it that it's summer school so we don't get so many exceptions during the summer?
It's a consideration. What I'd probably want to do is go offline and get more information from you and look at some cases and see if it's appropriate to do so. Or maybe we have some other suggestions.
Okay.
But without looking at the reporting, I can't really speculate. Okay. Let me write that down. Any other questions? Where's my pen? Yeah, sorry.
Based on this question regarding the summer school, how about when they have additional assignment on a regular basis to identify that too so it doesn't come up as error?
Yeah, when we looked at it, we raising the tolerance should pretty much eliminate that scenario where they're working a full-time assignment and an extra assignment, and together they go above the tolerance. We think raising these tolerances addresses that. If not, it's something we can look at doing. I know there was a suggestion of maybe not combining or treating full-time separately, which is something we can look at doing, but we think the tolerance, raising the tolerance is going to address that problem.
Okay, thank you.
I'm Gloria from Ventura County. We have some people, part-time people, who are on our list every single month. They work multiple assignments. A couple of them work, it seems like they work 2 assignments every month, so they're always in excess. And we have to approve the same people month after month after month. Is there any way we can just maybe, if you've approved them 3 months in a row, assume that they're good for the rest of the year?
Yeah, we have an edit already that sort of does that. It's the special compensation. If they exceed the special compensation limit, I think it's at $15,000 per fiscal year. Once you approve that one time, then you don't have to approve it again, so long as the next line that comes in is identical to that, the compensation is the same, it's for the same person. We could look at doing something like that, but I really want to see what the tolerance does, raising it up to see if that has a significant effect on that specific instance before going down that road. So I would say let's monitor it, keep watching it, see if you're noticing you're still having to approve these people, raising the tolerance didn't make any difference. Let us know, and we'll look into it. And if it's still a problem, absolutely we could look at making that change to the edit. Any other questions? Yes.
Hi, Christina Crawford, Solano County Office of Education. This past year we had a lot of retros, and with that came the BO 67 error. And so I think we just need more guidance and maybe some training for our districts on how to report retros correctly. And especially for employees who had like a step increase midway through the year, and just knowing how to report it and so that we don't get that error anymore.
Sure. How about we get together afterwards, and I'll have my external training team contact you, and we can set up training for that.
Thank you.
Any other questions? Yes. Well, I shouldn't have said other. Darn it.
This is Veena from Orange County. I said it before he did. Can we have a waiver up front, like I was mentioning to you earlier, that whenever we have some kind of special pay, off-schedule bonuses, or furlough restoration, some kind of special pay where they based it for previous year, but they are paid now. So if we use where it applies the previous year, then we get stuck with the penalties and interest, even though they do get, after the dispute, waived and everything, but we have to go through the whole motion of it. Plus, when there are 2,000 lines appear on the report, it muddies up the report. We can't see the good lines there. So is there a way if we provide the contract up front for a district and it won't calculate those penalties?
That's really a question for our accounting division.
Since you said others, so I thought I'll just...
Do you want to answer? Sure.
Robin, we need to make sure you're on a microphone to answer. Sure. I'm walking that way. Okay.
Thank you.
I'm up next, so I thought I would just come up. I understand your question, Veena, and it's not a situation where I have a ready solution, in that
it edits coming in. That's not something we built into the system because they are considered exceptions. So I hope we're serving you appropriately by handling your disputes rapidly, but that the system itself is performing the edit because it doesn't have any way of knowing that it's not. So we're looking for that documentation from you to waive it.
So are you going to look into it in future, provide it ahead of time before we report?
Certainly, that's a possibility. So if you, in working with Brenda or other staff on the dispute, if you want to submit that, we'll put that in our queue.
Okay.
Okay.
So we won't see then the errors on the.
Well, I don't know what the design would be. You know, we'd have to create another way for you to indicate that these lines are late because of this situation. So I can't tell you that I can easily envision how we would do it. It's not a quick fix, but I think opening up the dialogue is a good thing to do. So
Okay.
Okay.
Which we did.
Okay.
We've
All
been-
right. So I'll make sure it's in our queue. Okay.
Thank you.
One more. Okay.
And Bill, this has to do with some of the other errors on the full enforcement that are no longer employer approvable. Obviously, because I'm not a direct report, as a community college, we upload our file. I do get back, clear out any edits that I can. Some that are marked employer approvable, I just have to communicate to our county office. And then my understanding is she pulls our file into the main county file and has to go through the same motions with our edits as well as any others from other districts. So those that from our file or any others that are not employer approvable, can you tell me what happens with those? How do they get approved? Does she have to contact our rep before she can transmit our file?
Yes, if they're not approvable, then they need to be fixed, either via online correction or offline. They need to be fixed in your payroll system and re-uploaded.
And sometimes what we're reporting is directly what we're being asked to report. I'm getting lots of cleanup from our rep saying, here's an ES 456, you need to reverse this line and do it this way. I follow those instructions, and guess what? It creates one of these errors. So is that something that then when I do what's said and said, this is what I got, this is what I did, here it is, now it's a problem, is my county person able to contact the rep and they can approve it so that she can transmit the file, or?
If it's an approvable and it truly is valid reporting, then yes, the county can do it on your behalf. Without looking at the specific case, I it's hard to guess or say what's wrong, but it's certainly something you can send in for us to look at. Because ideally, if you're getting requests for adjustment, it should sail right through if it's a clean adjustment or reversal. You shouldn't be getting any business rule errors. You shouldn't.
Okay.
But, it's something, if you think it's working right and you're still getting the error, or you're reporting it correctly, you're still getting the error, raise it and we can look at it. Brian?
Excuse me, what district are you from?
You.
Okay, if you have any additional specific questions for Bill, see him after. I'm sure he'll be happy to answer them for you. And
I have a question from the remote.
thanks, Carmen.
Donna from Kings County, and her question is in reference to a pay code change crossing fiscal years 12-13 to 13-14. An employee was a 11-month employee, 12-13, and now is a 12-month employee in 13-14. We are receiving the MO-B051 edit for a member on our July 13th data due to the employee moving to a 12-month position in the fiscal year. Since the edit is not employer approval, what is required from us? Annotation?
What we'd like to see on that one is we'd like to see any documentation as to why the pay rate isn't changing. Because if they're changing pay codes from 11 to 12 or 12 to 11 or whatever it may be, theoretically the pay rate should be changing, especially if, it should. It's not to say that it could be correct, but we'd want to see documentation that shows that this person is still being paid the same rate, even though the pay code's changing. And if that's true and it's correct, then we can work with them to get the line through, the file through. So yes, if you come across cases like that, please send those in. Again, we did our best to analyze those new rules and make sure that there weren't any problems, but I wouldn't be surprised if you find stuff. So please send those in so we can take a look at them. Okay, I'm done.